Hello traders, welcome back to the Learn to Trade channel, and today we're going to talk about how effectively to use support and resistance in your trading, right? I know that this is quite the common theme, or some of you might think it's a little too basic, but let me tell you something. This is in fact super important because you might be using support and resistance very ineffectively. Okay, so we're going to start with a clean chart. All right, let's start with let's say the euro versus the US dollar. Right, let me just go to the correct. So this is the euro. Oh, this is the euro USD, but this is the free signal that I sent on Friday. So there you go. This is the projected move on the euro USD, and in fact, using support and resistance to trade it. So this is a great example, but let's use the US dollar, Canadian dollar, right? Just because, I already sent you the analysis on the US dollar, on the euro versus the US dollar, right? So we're going to start with a clean chart. This is the 12-hour chart on the US dollar versus the Canadian dollar, right? We're going to start by looking at the hourly chart, okay? Immediate support and resistance are good for entries and good for exits? No, they're not. Why? Because if you start focusing on intraday support and resistance, you are going to end up with a chart looking like this, right? I'm going to just go ahead and use every single area of support and resistance that I can find on this chart, right? This is the hourly chart. This is not even the 15-minute chart. But these are all the areas of support and resistance that we can actually find on this chart, right? Here you go. Do you want to end up with a chart looking like this? No. Why? Because this chart is untradeable to me. Well, it is tradable in the sense that you might find some entries like we did just here, right? But then the exits are going to be quite difficult to find if you focus on every single one of all the support and resistance levels. So if we zoom in on this entry that could have been a possible entry, right? After the rejection of the previous area of support, you could have entered long, right? And you would be right now in a 40 pip profit. But where are you going to exit? Are you going to exit at this level of resistance? This level of resistance? This level of resistance? Which level of resistance are you going to be exiting at? This one, this one. Are you going to let it ride to the next one or even the next one? How would you know what or where to exit that trade, right? Well, it's very simple. And everything starts by not using immediate levels of support and resistance. All right, and I'm talking about swing trading. I'm not talking about day trading, and I'm not talking about scalping. I'm talking about a system that is going to yield big winners. All right. Now let's have a look at the US dollar Canadian dollar on the 4-hour chart. Now, the first thing we're going to learn in this week's webinar is how to find support and resistance zones. And that, my friends, is quite simple. We are going to go to the higher time frames, right? We are going to go to the higher time frames. And why are we going to go to the higher time frames? Because we want to avoid all the noise that we saw on this area. Remember all the lines, all the support and resistance lines that we had on our chart. We were just looking at this particular period of time. So do you want to get chopped in such a small period of time before having the possibility of make real money? Of course not. So this is what we're going to learn this week. Okay. And Webinars are going to vary week from week from a full-on technical analysis of the market to educational content. So if you're not subscribed to the channel, you might as well subscribe to the channel because we will be uploading content every single day, right? So let's move on. And we're going to go to the 4-hour chart. In this particular case, or let me rephrase that. The 4-hour chart is I'm sorry about that. The 4-hour chart is the lowest time frame that we will be using to determine levels of support and resistance. Okay, why? Because we want to avoid the chop. We want to avoid the noise. So what we're going to do, we're going to look at the overall market, and we're going to pinpoint big moves where we have had big reversals. Now this is one, right? Now we're going to start by the low of the move. Oopsie. Then we're going to go to the high of the move and the pullback. So we had, in this case, we had a 425 pip move to the upside. That is a big move in about a month, 23 days, right? And then, with a 423 pip move to the upside, you can say that bulls were in control. And then we had a pullback, a 318 pip move to the downside. Now, after bulls were in control of this market, here is where we saw sellers jump in. Here is where we saw sellers jump in. And bulls were unable to swipe all those sell orders to continue moving price higher, and then sellers took control of this market. Now, this is an inflection point in the market, and this is going to be our level of resistance, right? This and only this level. Why? Because yes, we saw, during the move up, we did see some levels of resistance being worked, right? But bulls were still in control of this market whilst this resistance was being tested. So this means that this level of resistance was broken with, right? And on the difference, this level of resistance was not broken with. Why? Because bears took control of this market. And this is the inflection point in the market that we are looking at. So this is going to be our level of resistance. Now, you need to understand that the resistance levels, and let me just use a thicker line. You need to understand that levels of support and resistance are not straight lines, but they are zones, right? They're zones. Why? Because sellers are not going to position themselves on one single level price. You need to understand that there's going to be a lot of sell orders all throughout this zone of resistance. So you need to pinpoint the correct area or the correct low of the area on this particular zone of resistance, and that would be these lows, right? And this is your zone of resistance. Now, let's use the replay mode on TradingView, and I'm going to show you how we can work these levels of resistance, right? Actually, if I'm being completely and utterly honest with you, the correct low of the move should be this one. So the entire area of resistance is a big, thick zone. I agree with you. We are talking about a very large 72 pip area of resistance. But it really doesn't matter because it could yield some significant returns, right? And the low of this area of resistance is at the bottom of the line around the 133.34, because when we broke to the downside, this is the area that we retested. So it's very plausible that when we come to retest this zone, this is the zone that we are going, or this is the level that we are going to be retesting, making our stop loss a little bit tighter. Right, so let's go ahead and let's see what happens. So price continues to go down, right? Just get rid of this. No, this is fine actually. Price continues to go down from the highs of the moves to the lows of the moves. We have gone down 350 pips, 344 pips. So let's continue. And now we have a spike high, right? We have a spike high right into our area of resistance. Are we going to enter this area or not? Well, not. Why? Because I need you to look very carefully into what happened here, right? Now, I'm going to hide this. Actually, I'm going to hide this because I want to show you what, boy, hold on. Right here, hide and hide. Right? Why? Because I want you to show you, I'm sorry, what happens when you do not use the correct levels of support and resistance. Let's assume that this trader was looking at the exact level that, or the exact bottom of our level of resistance, right? And this trader saw this rejection in the market, right? And he got short. What happens next is that he got short squeezed by a big push up. And this pattern happens over and over and over and over. I call these weak sellers. Why? Because they are going to go short. They are going to try to snipe that entry without any justification of the actual reversal, and they're going to try to put their stop losses very close to their entry so they can go bigger. That is a mistake, and they will get slaughtered like this, right? So what is it that we need to do, right? Let me go back again and look at, where is it? All right, I don't remember where is it that I have my drawings. Well, it doesn't matter. Must be something. Object 3. Here it is. So boom, boom, boom. Right? And they will get slaughtered. Now, the correct way, if you want to use limit orders, or if you want to snipe your entries, the correct stop loss position would have to be at the highs of the box. But these kind of traders are not known for being patient, or for liking to have wide stop losses. So let's continue and let's see what price action brings us. Now, this is where it gets actually super interesting, right? These sellers who got stopped out, right? Some of them are going to impatiently try to buy this market. And when they see this double bottom, they say, okay, this level of resistance is going to be broken with. And that, my friends, is wishful thinking, and we should never, never engage in wishful thinking. You should always trade what you see. All right, so these traders are going to get long, right? Let's call it around these levels, for a break above the highs. But we know that this is a very, very thick area where a lot of sellers are positioned. How can we know this if we don't have market depth data? Well, it's very simple. You can see that, we know that by pinpointing this inflection point in the market, right? This super important inflection point in the market where sellers took control of this market, right? we know that in the future, this is where sellers are going to be positioned, right? So what are we going to do? Well, we are not going to try to buy this market. We are going to try to sell it. Why? Because we are still making lower highs. We are still below the highs of our box, of the resistance zone. So we are going to go and do this. Actually, let me change the color of the background of this rectangle to a more subtle one, because I'm going to be using some other tools that have colors in them. I know that, let's call it a brown, right? Brownish. And what are we going to do? We are going to try to sell this market, right? And this is not our stop loss or our targets just yet. I want to explain you something, right? We are still inside of the box. We are still inside of that area of resistance. And on the current or immediate or on the current, let me thicken this out for you, right? On the current market structure, we just made a lower high. We were making higher highs and higher lows, and right now we made a lower high. This tells us that we are seeing exhaustion in the current bullish move at an area of resistance, or a big area of resistance that we just found, right? So we are going to look for shorts. These shorts that got stopped out and turned into buyers are going to get slaughtered all over again, whilst we haven't even touched our buy or sell button yet. Now, where are we going to position our stop losses? Where are we going to position our stop losses? Above the highs, right? So this gives us an 87 pip stop loss, right? Now, where are we going to put our targets? Are we going to put our targets here at the bottom? This would give us a 1 to 1.74 risk to reward ratio for a nice 200 pip move. So this is a trade that I would take all the time, right? Why? Because if we break, I would put a buy stop at the bottom, or at the bottom of this kind of a double bottom, right? This would be my entry, and my first target would be, of course, the bottom of the current market structure. This is very logical. I'm going to talk about second targets in a bit. Now, what we're going to do is that we're going to put our sell stop here, and we're going to wait. If price continues to rally and breaks with our stop loss level, we just delete this order and nothing happened, right? We are not going to be the first ones to enter this short trade, but we are going to be the most secured short position there, right? Now, if we look at what's going on the big side, right? We need to be careful with our targets. Now, let's talk about targets. Why are we choosing this exact level? Because this is the level of support that we saw buyers jump in right here. Again, let's calculate the move from the top to the down. We're talking about a 334 pip move to the downside, and on a very strong bearish move. And here is where bears lost control and bulls spiked price up to the next low, right? So these should be our targets, and we do not want to be greedy So we're going to put our stops, our targets around the 131.20 to 131.15. Now let's see what happened. Boom. Right? That was a fast move. That was a fast move. Our entry got broken with, and boom, we hit our target. And what happened when we hit our targets? Well, bulls jumping again, right? And this is why we need to be careful when choosing our levels of support and resistance, because we are going to use our levels of support and resistance as targets. Let's imagine that you had this on your chart, right? All of these levels. Where would your targets be? It would be impossible to take profits here, here, and here. No, you need to look at the bigger picture, right? And just look at the market and ask yourself, where did bulls or bears lose control of the market, and where did bulls or bears jump into this market? And those are the correct levels of support and resistance that you need to be using in your trading. There's no other way around it. And you need to use these levels of support and resistance as targets, because you do not know if price is going to break with those levels. You don't have a crystal ball. No one has a crystal ball. No one can know for sure if those levels are going to hold or not. Now, what I personally do is that I take about 70 to 75% of my trade at the next key or the next level of resistance, in this case, and I let my position run to the next level of support in this case. And where is that next level of support? Exactly here. Why? Let's look at the big picture. And we're talking about a big move to the downside from these highs to these lows. We're talking about a 66-day and 724 pip move to the downside. Bears were in total control of this market before bulls took control of this market and took price for a 22-day and 421 pip right to the upside. So this would mean that, and you know what? Why don't we just go and play with these indicators opacity, because I want to have a look at price action itself, right? And here is where things get very interesting. We already made how much? How much did we make? Right here, let's grab the tool. From the entry to our targets, we just made 167 pips. I'm very happy with that. And when we hit our first target, right, we could move our stops to break even, which is what I normally do. In this case, in this particular case, we would have been taken out at break even on this pullback. But let's assume that we didn't, because sometimes that is going to happen. And that is the main reason that we need to take profits on the next level of support and resistance, because of these mean reversals, right? But let's assume that this didn't happen in this case, and let's see what happened next. Boom! We hit the next level of support, which was around the 1.30, which was a big psychological number, and this yield a 283 pip winner for the rest of our position, assuming that we didn't get stopped out at break even, which will happen from time to time, but that's just if you want to let your winners run. Personally speaking, I wouldn't have let this winner run, because the next level of support in this case was just 100 pips away. And that to me is, to me, the risk of getting stopped out of break even versus making an extra 100 pips on 25% of my position is just not worth it. When I let winners run is because I am looking at a possible 200, 300 pip winner, right? And that is exactly how to use and how, well, this is exactly how to pinpoint support and resistance levels and how to use them in your trading. And that is exactly what we do. Let's go back to the Euro US dollar. Euro US dollar chart that I showed you earlier on the free trade idea. Right here, this is the 4-hour chart, our entry, stop loss, etc. Hold on, let me go. I can't see it here, so let's go to the 12-hour chart. Wow, it isn't here. Well, it doesn't matter. This is our entry on the Euro USD. We are already in that trade. We are already in that trade, and we are looking at two different targets. Actually, because I'm going to go to a 2-hour chart because I'm going to show you. This is the projected move. Oh boy, this is the projected move on the Euro US dollar, right? This is the projected move. We're playing the range at the 161.8. I'm not going to explain to you what we're doing. Just support and resistance. Our entry was here. We took a little water. I'm going to be honest with you, but again, with our powerful stop loss positioning, this is the first target we're looking at for a nice 100 pips, right? And I'm letting the rest of my trade run. Why? Because my ultimate targets are here at the lows, and I am looking at an extra 135 pips. Now, the difference between one and the other is that I'm looking at a double move from target 1 to target 2 on a great risk to reward scenario, right? And this is what you're going to be getting from us. If you want to join the VIP channel, I'll show you exactly what you will get. Right now, this is what you will get. This is the VIP channel that you get the signals from. The Euro US dollar signal, we had a silver signal, this New Zealand dollar US dollar signal. So you get the actual chart with the targets, and this is another runner on the New Zealand dollar US dollar with the validation level, TPs, everything. This is what we do. If you want to trade with us, I'll leave you a link below this video. But if you not, I hope this brought you some attention on how to correctly use support and resistance. So I'll see you in the next video.